Hey everyone, and welcome to the first APL Spaces. This is a very special episode. It's our first. We've been doing a lot of this with Karina. This is the first on Aptos, and I hope you guys enjoyed. For the first one, I brought Nigel, who is the co-founder of Mira Finance. Did I say that correctly, Nigel?
Yeah, you got it.
Okay, Nigel. Thanks a lot for being with us today. I hope we can bring some good conversations around what you're doing for Aptos and for your project as well. So to begin with, maybe you can give us a little bit of an introduction to yourself. So like what you've been doing so far and how you got to where you are now.
Yeah, absolutely. Pleasure to be here. Thank you for having us.
Of course, man.
So I guess I'll start kind of like back in college. I entered, and I think all throughout my younger life, I was pretty fascinated with stocks and trading, and it made me pretty intent on like this track to investment banking. And when I got to college, I like did all the networking, got really into it, got a lot of good exposure to traditional finance. I was an investment analyst and did like a lot of quantitative stuff with consumer discretionary stocks.
Mm-hmm.
And kind of by coincidence, I stumbled upon computer science. I never really knew it was a fascination for me. The image I always had of it was people like sitting behind desks, just being kind of miserable. And I had a friend that convinced me to take a coding class. And within like a day or two, I just really fell in love with this new like programming logic and puzzle solving, and like really did a deep dive. And I think within a week, I decided I wanted to pursue 2 degrees, one in finance and one in computer science. So as you can imagine, crypto was like right at the crossfire of these 2 areas of study. So I started coding, really like try to hone my skills in a lot of different languages, and got software engineering exposure. And then I kind of started stumbling into white papers, and they were really fascinating to me. And like I was having all these ideas about stuff I wanted to build, and I was like trying to reach out to a lot of people, but at the time, like I think Crypto Zombies had just come out, so I learned how to code Solidity on there, but
Mm-hmm.
it wasn't really enough. I met someone who like convinced me to try working some open source tickets on Ethereum. And he was like, yeah, like, I'm sure you can pick it up pretty easily. No problem. And it was not easy at all. Obviously, like super complicated tickets for people who like were with Solidity at the beginning, but it gave me a taste of what I wanted to get really good at, which wasn't just like this language, but building logic for this new way of thinking that like cuts out middlemen. So rather than just like building data structures to store stuff,
Mm-hmm.
building legal code in a way. And I was really lucky to get a blockchain research position where I innovated a Merkle DAG structure. So at the time that I did this, it didn't really exist yet. Like there were Merkle trees, and I can talk about those maybe if listeners aren't that familiar.
Sure.
You want me to go into it?
Yeah, absolutely.
Okay, cool. So like in really simple terms, basically a Merkle tree is what allows the traditional blockchain data structure, which is a linked list.
Mm-hmm.
I'll take a step back actually. So like in a blockchain, you have a ledger of data. Basically, it's a bunch of information stored in one place. And the beauty of it is that nobody needs to trust each other because the networks of the computers support this infrastructure and confirm all the blocks in the chain. So what happens is some information gets bundled, it gets broadcast as a block, and it gets added to the chain of blocks. And every new block that's added requires the compatibility, essentially, like the confirmation of all the previous blocks.
Yeah.
And the way that happens is the Merkle tree. So the Merkle tree like creates a tree of all the blocks that have ever been created, so that the next block in line has to be a specific one. And you can't have malicious actors just broadcast a random block with like data that says Afonso sends $10 to me in Bitcoin. And so this has existed for some time now, and people were starting to experiment with new data structures. But the Merkle tree hadn't been innovated for other data structures. So the research I did was something called DAGs, directed acyclic graphs. And basically what that is instead of having a linked list where you have one block with a data that says next block and it points to the next block, you can have a block that points to multiple blocks, more like a tree. And this allows you to really increase throughput because instead of having one transaction at a time, you can have multiple. And it's kind of like forking, but it's a little bit different. There are a lot of security challenges that come in when you do this because of something called double spending attacks, where somebody would try the same transaction twice. And there's a lot of the Markov chain model, a lot of different implementations of this. And you can look into IOTA. They created the Tangle to work around this for the Tangle, which is a similar DAG structure. Hedera Hashgraph did something similar. And what I built was this DAG structure with the Merkle functionality built into it. And the implementation was a little bit different because I was building it for mobile wireless sensor networks. So instead of nodes being people with a wallet that are sending money to each other, it's more like traffic lights or water sensors that are sending information to a ledger.
Almost
but a lot of the same
IoT integrations, right?
Exactly, yeah. But a lot of this thinking still applied. There's a lot of synergy in the security requirements. And so I innovated this Merkle DAG and a research solution, and building that and figuring out everything gave me a really good understanding of blockchain engineering at a very base level. And so I've been using a lot of that knowledge to build.
Fascinating. So you kind of stumbled upon crypto through the technical side, not from the financial side, which is usually how we all know crypto, right? Oh, I want to get rich. But you kind of went the other way, which is pretty cool. And now that I've been a little bit more on the crypto for a longer time, it's the fascinating side more than just pump it up and get rich. I think that part, the blockchain, how incredible the technology is really what captivates us and keeps us here. So and then at some point you founded Mira.
Mira Finance. So I think that was 2 years ago, and here's where I bring in Andrew into the story. Andrew is my co-founder, and we grew up in the same neighborhood. We were both into crypto pretty early. We liked debating and arguing, and we're always battling different ideas about what could be better and why crypto had a lot of friction. And we had a lot of ideas that we were oh, that could be cool. And we just they fell through the cracks. But over the summer, we came on this idea for Mira Finance. And we looked at each other. We were this is the one. We're really all in on this. And pretty much since the summer, we've been heads down working every day, putting in a lot of time and effort to make this happen.
So it's a team of two?
Well, it was when we started. We've added a few more people. We have a head of business development who's a sales wizard. He's been helping us with fundraising. We have a marketer who helped us put together the Discord, the Twitter, head of design, and then a couple of engineers. I created a little scrum. It's basically been contract engineers because we're kind of just bootstrapping this together. But I would make little tickets so that we could push the dApp further along. And we kind of pulled back on that just to extend our runway since it might be a long winter, but we're still building and making a lot of progress. And we're pretty close to launching our V1.
Can you explain to us what Mira Finance is?
Yeah, sure. I realized I skipped that part. So to put it very simply, Mira Finance is the Vanguard of crypto. If you don't know Vanguard, basically they create the world-renowned index funds. If you want exposure to the stock market, you buy one of these single assets. It's very easy to do. And when you buy that, you get exposure, depending on which index fund it is, to all of these different assets that are compiled in there, and like it gets rebalanced on its own. You don't really have to do anything, and it's been proven over time that that's really the best way to invest. Index funds perform on average better than 80% of hedge funds, and it's a reliable, safe way to get exposure to the market without getting docked down on fees. And it makes investing a lot simpler. This is like the strategy that many people use, including investment managers, and all sorts of like other funds bundle index funds together. So like in traditional finance, they're really rooted into the economy to give people exposure.
So it's kind of a like maybe correct me if I'm wrong on this, because I'm not the expert on the financial side, but it's like crypto ETFs or something like that.
That's a good way to put it. So like an ETF in stocks is an exchange traded fund, which means you have like another security you register on the exchange that people can buy at a set price. And that's really cool, but there's kind of course, because it's traditional finance, like there's some bureaucracy there, because when you build that, then you need a legal team and a bunch of analysts. And then like for some funds, it's not that bad, but for some funds, you end up paying 1% a year for all of those fees. And those really add up over time. Those accumulate, the banks funnel that money in, and that really hurts you in the long run. So like in crypto, we're able to build this really elegant solution where instead of like registering and creating some process where there's like a legal team and like a bank that keeps all the money in one place, you can invest into a fund without ever losing custody of your money. So like we build out the backbone so that we can still have index funds, but without having any centrality.
Yeah, that's what I was going after. So there's a decentralized component to all of this, right? How do you do that? How do you achieve that part? Sounds complicated, to be honest.
Yeah, it does, but it actually wasn't that hard. So we'll get to this, I think, at the end, like why we're building on Aptos. But basically, Aptos is built on this language called Move, which was designed with smart contract programming in mind. So there are a lot of unique security guarantees. And one thing that's common in Move and in other smart contract languages is what's called like a resource account. So you hear that and you think like it's another person that owns that account, but what it really means is within the contract, you create an account self-governed, and you can send funds there. And that's how you would have like, that's kind of how AMMs work to collect fees, or how you would have some like escrow account in a smart contract. If we were to place a bet, say, and like the condition is if the sun rises on Tuesday, you pay me money, then money would be stored in the resource account, and it would check that condition. And if the condition is met, it'll be sent to me or sent to you on Tuesday. And so we leverage that to build index funds, essentially where like you have this pool, and we call it, the Mira Layer 1 fund. And when you invest, what happens is you connect your wallet, and you send money into the pool, and everybody who invests in that fund, their money's all in a single pool, so that gas fees are efficient, it trades in one place, but the resource account has a ledger that keeps track of your stake in the pool. So that when you go to withdraw, you can't withdraw more than your stake.
Kind of like LPs on a liquidity pool.
Yeah. I think that oversimplifies it a little. There's a lot of like extra security stuff we built in.
Of course.
Yeah, like that's how we do it.
Okay, cool.
Hopefully, I'm not over-explaining stuff.
No. That I think it's the way you put it is really easy to understand. So there's a pool, and you have a share of that pool, so to speak. Of course, as you say, probably a little more complex than this. There's all these security issues that you have to probably think about, but so the layman understands, that seems like a good explanation. So, who chooses the investments for this kind of ETF?
So we're starting with chain-based funds. So like the first one we launch is going to be the Aptos ecosystem fund, and we're working with Aptos like grant team to help choose. It'll be like market cap weighted, most likely, and it'll evolve over time. The same way that like the S&P 500 index fund does.
Okay.
It'll be like the top 20 companies, say, on Aptos or something like that. But we're also looking into working with Launchpads like you guys so that we could have different funds that give exposure to different like capitalizations for maybe higher low risk investors.
Makes sense. Makes sense.
Yeah.
Yeah, because on the ETFs, on the traditional finance, you have that low risk and high risk ETFs, right?
Right.
Some people just want to buy the SP 500, right? That's it. Some might want to go to the more risky assets. So it makes sense that you have a little bit of a choosing path, so to speak.
Right. And as time goes on, I should mention we're going to hire, I think, like a third party, either team or single financial analyst to make those decisions for us.
Okay.
And later on, like we plan to completely like let governance overtake the company, where like we don't really have control anymore, and governance voters would be deciding how the criteria are chosen for funds.
We're getting there to the governance side, because I wanna hear about it as well. But before we go there, just now that we're on this topic of investments and ETFs and kind of comparing crypto to traditional finance, do you think the best way to invest in crypto is to think of it as a traditional finance system? So the best way would be for people to diversify their investments into crypto?
Yeah, I think diversification is always really good, but this is a tough question because I think you're pitting two different philosophies against each other here. Mm-hmm. One being traditional finance, where obviously there's exposure. It's usually like broad economic exposure, and you benefit as a country grows and its companies also flourish. And that system has kind of been slighted to where if you try to play the game, you're probably going to lose, getting docked on fees, paying for order flow on Robinhood, things like that. And crypto is supposed to flip this whole concept on its head, where like there are no whales. Like the market controls the market. You don't have like big players and dark pools that are obfuscating the process. I don't think that's perfectly true. You have like some of each factor in each market. But what I do think is like token ownership is the big difference here. And in a couple of years, there's going to be less of a difference between stocks and crypto tokens, because in a lot of cases, tokens can have utility, which is really cool. But I think stocks might adopt this too. Like when you buy a stock, you have a share in the ownership of a company. A lot of tokens use the same model. And like once there's a better standard for how tokens operate and ecosystems as a whole, it won't just be like traditional finance and crypto. It'll be tokens that represent real estate, art, stocks, bonds, commodities, crypto, right?
And that's a real discussion that is going on, right? Is a token a share of a company on crypto? Right. It shouldn't, right? Because if it is, you need to be you need to be traded as that it's a whole legal complication, right? So there's a big conversation going around about that, and I think it's good that we're in it and that we're talking about it. But it's still gonna be it's a process, and I think you guys are doing the right thing, like trying to give utility to your token, which we'll come back in a little bit to that. And yeah, I like talking about this part of the legal stuff that most people don't really think about, right? But it's important because now you think you have a good project and you're just trading a token, and if you're not careful, you can be caught by the SEC and
totally.
and be in trouble.
Like there are a lot of shitcoins, to put it simply. And I think you're right. Like it gets really complicated. And one idea with tokenomics and crypto that's really cool is you can democratize private markets, because in traditional finance, there's a lot of regulation around needing to be an accredited investor. Your manager has to pass the Series 65 exam for you to invest in a company that's not public. And that's a huge, huge barrier. There are like some like syndicates and crowdfunding that's come up, but it's pretty complicated. And like with
It's not
ICOs,
easy.
this is an old trend now, but there are a lot less barriers.
Yeah. Basically, crypto is empowering the
Right.
common people to be able to do these financial decisions for themselves, which I think it's amazing.
Yeah, and I think all these tokens are going to kind of converge to a similar place where there's some regulation. It'll depend on the token you're buying. It won't be completely decentralized. We can't really control that, but what we can do is build the backbone so that you can have any token in one place and see like all of your valuables. You can see like the title to your home and artwork that you own and your crypto and your savings account. So I think that's really like the bigger picture.
Sounds amazing, man. Sounds amazing. One other thing I saw when I was looking through your docs was something that you called strategy backtesting. This was kind of a feature that was listed on your documentation. Can you tell us a little bit about it?
Yeah, and by the way, like that is damn hard to implement. Strategy backtesting is basically like when if you design a portfolio, say 50% Bitcoin, 50% Ethereum on our site, and you want to invest in it, before you invest, you can check and see how it's done over the past week or month, 6 months, year. I think we're going back 5 years, which is really hard to pull that data in an efficient way. A lot of tokens aren't even that old. And I think the big challenge has been like deciding which data we put on chain and which is off chain. This might be a little complicated. I don't know if this is something you guys think about, but like nobody wants to see that feature and then go, okay, I want to backtest 6 months. Oh, now I have to pay a 20-cent gas fee because I'm going to go through all the data. So we have some partners that are helping us integrate the strategy backtesting, and it's looking like that's going to be a version 2 feature, not when we launch in Q1 of next year.
But you plan to have a lot of on-chain data for this? So I would imagine the price, you don't need on-chain data for that, right? You just go to any CoinMarketCap API and you get the price data. But for some other metrics, you might want to go on-chain, and that's the issue, right? You need to kind of query the chain, and it takes some fees.
Right. Well, luckily there are companies like the TAI. They do actually a lot of the coin feeds for Cointelegraph and CoinMarketCap, I think too. And basically, like they've built out this infrastructure for quite a while now, so that we can make API calls, and that's all off-chain data.
Yeah.
So it doesn't affect the user, but it reflects live prices, and we can get into detail to get financial ratios and stuff like that. Yeah.
So this is more of a V2
it is
feature, right?
Yeah. Okay. But we'll get there.
Yeah, for sure. You have time to build now. What about profit booking from the investments? Can you expand on how that works? How someone can kind of start collecting what they earn?
Yeah, and we've went through like iterations of this in the documentation too. So the first idea was basically that like I create a portfolio, it's 50% Bitcoin, 50% Ethereum. I charge a 1% management fee. My friend invests. Now I earn the fee, and then when I withdraw in the token, and I'm booking profit at that point because I earned the fee. Or if the portfolio goes up, I also book a profit. But we realized like this might cause some issues with the token and create selling pressure, because we don't want to force people to accept the token and then feel like they have to sell it to book their profits. So what we decided was a much better approach is to build the profit booking into the smart contract in a way. So like, remember how I said everything's in one pool and a ledger keeps track of your stake. Instead of having to go through the swaps and the gas fees to withdraw profits every time somebody benefits from a fee or the portfolio growing, what we can do is we can just adjust the stake. And like, it requires a little bit of math, but it's really not that complicated, and it's much better for you as a manager, because when you charge a management fee, instead of like having pennies come back to your wallet, you see your share in the portfolio grow over time.
Oh, that's okay. It's kind of I keep coming back to it, and maybe it's not the same, but it's kind of like the liquidity fees on a pool,
Right.
right? They just stay inside,
Yeah,
and you don't need
it
to,
is.
and you get a bigger share of the. Okay, it makes sense. Makes total sense.
Hmm.
I think
Yeah.
you guys are are doing the smart thing. Yeah, because having pennies going back to you every time, and then you lose on the fees, right? It's kind of
Hmm.
not the best solution. So yeah, this way
Right.
you just get a bigger share. Makes sense.
And we think
Um,
that way, like you're more incentivized to reinvest into the pool, and
yeah,
like it makes managers more faithful because really your goal shouldn't be to liquidate all of your other investors. It should be like long-term growth, and your goal should be to keep as much of the pool as you can. The same way, like a
exactly.
Bitcoin miner shouldn't be selling their Bitcoin; they should be accumulating.
Exactly. Yeah, exactly. Harvesting for a long time, of course. Now you mentioned briefly the Mira token,
Mm-hmm.
but we haven't discussed what it is, kind of what you're planning with it. Can
Mm-hmm.
you shed some light on that?
Yeah, sure. Again, some of our plans have changed. Initially, we were deciding to like launch this token and use it as part of our fundraiser. And then, like when we launch the product, maybe our investors own 20% of the token, we own some of it, and then you guys get some of it released. And we didn't like that approach. We didn't think it's fair. We don't know if we can trust investors to not want to like to follow the vesting period. Like we're basically designing a way to give a third party early access to our platform when we're really building a platform for people to benefit on. And we're trying to do this differently than traditional finance. So it's not always like the big players that are
Mm.
funneling all of the real profits. So because of that, like we're issuing safes, but it's only equity to our investors. And like we're designing the token, but we're holding off on releasing it until we're sure that like it's really built the right way. We don't want to build a shitcoin. We want something that the whole ecosystem that we're creating is built around, and something that users can be confident when they invest, they have a part of our growth, and they can prosper over time. And like ultimately the goal again, like as the token evolves, is all of the fees that we collect, which are going to be pretty marginal. I think we're doing like um, they're not official yet, but I think there will be a 0.95% streaming fee on the index funds that will taper off, and then like small creation fees when you design your own index funds, and small investment fees when you
Okay.
invest into like a uniquely designed fund. Um, but like the idea is all of that revenue will be converted once we like cash out the investors. As a user, you don't have to think about investors making money off you. Instead, the revenue is all contained within the tokenomics. And when you buy a token, you're sharing in the revenue. So like
Okay.
if you're paying for fees with a token that you own, and it's not really costing you anything.
Okay. Makes
And that
sense.
and as the platform grows, you'll actually profit, even though you're paying small fees because you own the token.
Okay. Yeah. And
If
yeah,
that makes sense.
makes sense.
So like it's a
Makes
little
sense.
bit complicated, but we're designing it so that
So
users benefit.
yeah. So the fact that you didn't do any IDO yet is because of that. You're trying to kind of do the architecture of the tokenomics first to get it right, right?
Right. We don't want to like rug
No,
like
sure.
we don't
Even if
want the
it's not
token to get
on
rugged. Like
purpose,
it
right?
needs to have
Yeah, yeah, sure, sure.
consistent value. And
Of
we
course,
shouldn't
of
really
course.
own any more than the people who are using the platform. You know, it should all be based on how much you're using the platform. If you're a big manager on our platform, you should have a lot of the token. And same if you're a big investor. And like, even though we're building it, we didn't do much to earn the token if we don't have an active stake in how it's performing and how the users benefit. And same with our investors. So like, we don't like the idea of setting aside half of the tokens to people who aren't using the platform.
So, but you mentioned you have a guy on your team that's doing the fundraising. If you're not
Mm-hmm.
doing it through the token on IDO, how are you kind of navigating this fundraising stuff?
So instead, we just issue equity to our investors. Like they invest
Okay.
money in us, and they own a piece of our company. And basically, like on our revenue streams, we pay them out.
Okay.
But
Okay.
then, like over time, we convert from an equity-based company to
to the
token-based
token.
company.
Okay.
Yeah.
Perfect. Okay.
Like the goal is to cash out, like get rid of the investors.
Okay.
That they're important to us and we love them, but we think that like there's always going to be some conflict of interest because ultimately your investors want to see you succeed, but they're also focused on like their exit and moving on to the next investment and like
they want to see the revenue stream coming in,
which is natural. That's part of the venture cycle, but we have to make sure to separate that from the users who want to keep using our platform.
You are a perfect case for a company that actually benefits from VCs if you do it right. Which we did a Medium article, I think, like 2 weeks ago or 3 weeks ago, where we talk about VCs and what people sometimes see VCs as the bad actors. They are not. They are very important. They are just not important in any project, right? For us, it doesn't make any sense to have VCs. We're not doing anything that requires fundraising. We're doing something, or at least doesn't require VC fundraising from the start. So it makes sense for you probably because you're doing a much different project than we are. But it's good that you talk about it and explain people, and we are doing the same. Like explain why VC money is important at the right time, but it's not at other times and for other projects. So about governance that you mentioned before, this will be connected to the Mira token, I assume.
Right. Yeah.
And what kind of decisions can users vote on? Do you have you?
Yeah, there's a lot of important stuff. What's his or her name, by the way? Your cat.
Oh, the cat?
Yeah.
Lula. It's squid in Portuguese. she's adorable, but she messes most of my interviews. So.
So yeah, there's like a part of our platform that I don't think I've really discussed yet, which is it's not just where you see like your investments and just leave them there and check on them. We're integrating with a lot of different protocols so that everything you want to do with your crypto and in the future with any token that you have, you can do in one place. So you can transfer your funds directly from like your investment portfolio into a staking pool or borrowing, lending, Launchpads, all those other things. And because of that, like we're going to be funneling volume to like our partners. For example, like Ditto staking on Aptos. And it'll be like a multi-chain thing where you as a user, you don't have to know what chain you're on, but based on the tokens you own, you'll see which staking protocols you're capable of investing into. And like for Ditto, for example, we're forwarding a lot of volume to them. And as a user on the platform, you might have preferences about which staking protocols you trust more or which Launchpad you think is the best. And so voting on those decisions is very important. In addition to voting on like how investments are managed, whether like specific investments are staked and like the criteria that are used to choose when rebalancing happens and which tokens belong in which fund.
Okay. Just out of curiosity, have you started coding this part, or is it just in theory for now? It seems fun to do the programming for that for the governance.
Well, so like building the backbone, we're able to plug in protocols really easily. We built like a modular infrastructure basically, so that we can connect a staking protocol to a specific portfolio or design it so that these types of portfolios connect to this protocol. And the transferability, like to a staking pool or to a Launchpad is pretty easy. Like we built all of that. The only thing that's really missing is the governance token, plugging that, but that won't be very hard to do.
No, it just sounds fun. That's why I'm asking. It sounds like a fun part to do. I like this concept of governance and, trying to imagine how people are going to be needing to vote, how they're going to allocate their tokens. And so this will be, are you imagining it as a one-to-one with token ownership, or are you having like tiers or something for this kind of votes?
I think it'll be one-to-one.
Yeah.
But yeah, we haven't figured that out yet.
Okay, cool. It's early stages. So I asked you before, but I'll just reiterate. You chose Aptos due to the Move language, right? So this was kind of the big decision factor for you guys. or was it something else that brought you into Aptos?
I think it was mostly an engineering decision. The decision was really to build everything on the Move language, and it's because of those security guarantees I alluded to earlier.
Mm-hmm.
It's hard to see if you're not like programming consistently, but moving from a language like Solidity or Rust to Move shows you so much about how you can design a language for smart contract programming. And like Solidity and Rust are really cool languages, but Solidity was kind of like the guinea pig, the first smart contract programming language, and it was built like based on JavaScript, which has nothing to do with ownership really. So there are a lot of cool properties, but it's also caused a lot of issues, like when we see security exploits with ownership and all sorts of hacks. A lot of them are because as a developer, when you're building in JavaScript, there are ways to make really discrete errors, either intentionally or by accident.
Yeah.
And like they go missed. And the same is true in Rust, though to a lesser extent. But in Move, like all of the security requirements are packed in by default. And it's called Move because basically like every object that you create, as opposed to just like floating around and existing like it does in most languages, has to be owned by an account. So it flips the structure of coding on its head, where instead of the object oriented, it's still kind of object oriented, but every object has to be owned like by an account unless you explicitly like type it as something else. And that's why it's called Move, because in order to move like a structure, you have to call the move function to move an object from one account to the other. And so the way that this is built, like when you're learning, you have to learn all the security requirements. And by default, you can't do very much of anything with a variable. You have to like explicitly delineate what you want each variable to be able to do. So our thesis is that like as DeFi evolves, there are going to be much less exploits on Move-based languages, and it will become probably the most secure place for crypto to flourish.
Glad to hear that, man. Glad to hear that. I think we've wrapped up our interview. I'd like to thank you again for being here on the first ever episode of APL Spaces. And if you want to plug in some of your socials, go ahead. We will add them to the description below. So if you don't know them by heart, don't worry. Just talk about them and we'll add them later. No issues.
Okay, awesome. Our Twitter is Mira_Finance. You can check out our website. We have like a lot of documentation from there you can look at. We have a demo, and you can learn like a little bit more about the tokenomics for later on, what we're working on right now. We have a newsletter too, which is on our Twitter.
Nice.
We have a Discord if you want to get really active and potentially earn credibility for future airdrops. And I think that's kind of it. There's a lot of info out there. We've been typing away.
Thanks a lot, Nigel, again for being with us. As far as you guys know where to find us, APLaunch.com. You have all the links for our socials there. And I hope we can do this again soon after, I don't know, maybe after you launch or maybe after you have some good news to share with us. We can keep doing this as many times as you want. We're always available. Thank you, guys. Thanks, guys at home. And thank you, Nigel, for being with us. See ya.
Yeah. Thanks for everything.